Welcome to the next session on cost accounting part. So yesterday, what we saw what is called as variable cost, we saw fixed cost, we saw what do you call it as direct cost, we saw what is called as indirect cost. So we saw 4 different kinds of cost out there, and we did explain the features of all these. I in fact explained the features of all these with especially with taking example from a textbook of a car manufacturing company, assembly company. Variable cost varies. It is not static. Fixed cost remains fixed irrespective of whether the production is on or not. Direct cost, linear relationship with output, Indirect cost can be variable, can be fixed, will not have a linear relationship with the output out. The cost that can be directly traced back to the end output. I said I used the example of this pen. I said I have 5 granules of plastic, I can make a pen out there. Directly each granule can be traced to a pen that is there, that is the linear direct relationship which can be built in. Such costs are all called as direct cost. Now in a manufacturing setup, as you can see on the slide, you will have what is called as a direct material cost, that is the material which goes into production directly, which is traceable in the output. As I said, tires go into the assembly of a car, 4 tires go into the assembly of a car, it can be seen in the final output of the car out. There is a direct labor, the labor which is directly involved in the production activity, in the manufacturing activity. I pay $100 to a labor, he makes 10 units of the output. That means each unit of the output, the direct labor cost is about $10 out there. That is $10 is what I pay out there. So the cost that is directly traceable out there. Any other overhead out here, the overhead could be your factory lighting, your factory rent, could be basically what do you call it as even your helper salary, etc., etc., etc. The costs which are not direct costs but which are related to manufacturing, the costs which are not direct costs, non-direct costs, all indirect costs. Indirect costs which are related to manufacturing are all called as manufacturing overheads out there, are all called as manufacturing overheads. So in the manufacturing cost, classification of manufacturing costs, these are the 3 basic aspects that one needs to remember very well out there. Now what is the direct material? I have explained. It is the raw material that forms an integral part of the product and conveniently can be traced directly to the product. Please note, this is what is the key word there, directly. A car radio installed in an automobile, that can be traced back. Tires in an automobile, all direct costs out there, that can be traced back. These are all what is called as direct material. Direct labor, the same thing. I am just going to read out the explanation that is there on the slide. Those labor costs that can be again easily traced to the individual unit out there. I pay the laborer $100 for 10 units. Every unit he manufactures, I pay him $10 out there. Try directly traceable to the output out there. Direct labor cost. Now what happens out here? Manufacturing overhead includes all costs which are except direct material. Please note, except direct material, direct labor. These costs cannot be traced cannot be readily traced to the finished output product out there. It can be indirect material, it can be what is called as indirect labor cost, etc., etc. out there. All these becomes what is called as manufacturing overhead out there. Moving further, examples of manufacturing. Depreciation on a manufacturing equipment. Sir, depreciation is with usage. No. Depreciation is basically pertains to usage and passage of time. The machine can depreciate even if you do not use the machine. For example, you would have taken example when I talked about financial accounting. You buy a car, you don't use it, you keep it locked in the garage for 2 years and then you want to sell it. The car value is depreciated for 2 years out there. Though you have not used it, it has depreciated, value has reduced. So, depreciation is a cost which you incur because of usage and passage of time. So, it has no relationship to the output. Again, utility costs might be power, water, etc. Property taxes, insurance premiums, all these things are what we call it as manufacturing overheads out there. These are indirect costs? Yes, only those indirect costs associated with operating a factory are included in manufacturing overhead. That is related to manufacturing, indirect costs out there related to manufacturing. All these are included in this particular case out there. Moving further on, I am going to take the next stage here. Sometimes there can be what do you call it as direct expenses. What do you mean by direct expenses out there? I am just going to write a high circle this out here. There can be expenses which can be traced back directly to the product out there. It is not part of material, it is not part of my labor. There can be some kind of expenditure that I incur which can be directly traced back to the end product that is there, that is manufactured out. Let us say, for example, I have what do you call it as I have a lighting on the mounted on the machine. The machine works, the light is on. The machine does not work, light is off. Machine works only when the job is on. Machine does not work when the job is off, when the job is not there. So, what happens to the power consumption of that light? There is an extremely powerful lighting system which I have mounted on top of the machine, on top of the job. So, moment I attach the job in the machine, the light switches on. Moment I take out the job from the machine, the light switches off out. And that consumes heavily, that consumes some amount of power out. Now, that expenditure can be directly traceable to the output because I load 100 jobs on the machine, and each time the job is on the machine, the light is on for about 10 minutes out there. So, 100 jobs I perform in the day. So, 100 into 10, that is the amount of time the light is on and the power is so much power is consumed out. I manufacture 500 units in a day, in a month. So, 500 units into 10, that is the amount of time the light is on, and that is the amount of power that light is on. So, it is again directly traceable. So, such expenditures are all called as direct expenditures out. That is, these expenditure is also directly traceable to the end output in that particular case out there, and end output it is traceable. So, it is called direct expenditure. So, direct material plus what do we call it as, typically we use the term what is called as DM plus direct labor DL plus direct expenditure DE, as you see, all these put together is what we call it as prime cost out. All these put together is what we call it as prime cost out there. Prime, core, it is a simple English word, prime, that's all. Prime is a simple English word. Prime means core cost. All these three become what is called as core cost of a product, the prime cost of a product out. I add the manufacturing overhead, all the other expenditure relating to manufacturing out there, then these three put together would basically give you some kind of a cost of production, of course adjusting for the inventory. We will do that a little later. Now, what I am taking? I am keeping the material away. I am taking only the labor, the expenditure and the overhead, only this pool. What does this pool do? This pool converts the raw material to a finished goods out there. This pool converts the raw material to a finished goods, and that is where we call it as conversion cost out there. That pool we call it as conversion cost out here. You can see the slide out. Now, this particular, I eliminate material and then I take all the other expenditure, direct labor, direct expenditure and then the manufacturing overhead. These three I pull together. What does these three do? Convert the raw material, direct material to a finished product. So, these are all what is called as conversion cost out there. I hope I am clear. Let us take some exercises with this, numbers with this, and in an Excel sheet I will try and solve all those out as we go along. What is the prime cost? I have tried to explain the same thing in the form of a slide out there. It is just the sum of direct material, direct labor cost plus other direct expenditure if incurred. direct material is derived from the what do you call it, the material account, that is what do you call it as the cost of material that is issued to the shop floor. Direct labor is the cost that is incurred in basically converting the raw material to the what do you call it, the next process out there, finished good, that is directly traceable out there. Now, any other expenditure, direct expenditure, when you calculating the prime cost, remember you should not only take what is called as the amount spent, the cash outflow, you should also take the accrued expenditure, and that is the reason I have specifically mentioned this out here. That is only the reason I have mentioned it here. Moving on further, in this particular case, the step 2, what we do? We look at cost of goods manufactured out there. Let us know one thing, let us keep this in abeyance as of now, and then I will go into an exercise out there for you, and then I will come back to all this. Determine the prime cost. I have given you all this. Now find out what is the prime cost from this. Let us try and see if we can find the prime cost from this. Now, when I am going to do the prime cost from this, let me use an Excel sheet out here. I am just going to use an Excel sheet out here. I am just going to use an Excel sheet out there, so that I have done the screen sharing in such a way so that you can see the problem as well as the solution that I am going to type out there. Now, what am I doing? I am looking at exercise 1, in class exercise 1. Determine what is the prime cost out there. Let's solve the first exercise out in class exercise 1, and let's sort of take it up. We say, what is that? We need to look at determine the prime cost. That is all what we need to look at calculating. So let us look at what is direct materials out there. Direct materials. What is the cost of direct material? Direct material, direct labor, direct expenditure is prime cost. So let us figure out. It says raw material purchased, what is called as is about 20,000 out there. Materials purchased is about rupees 20,000 in this particular case out there, and that is exactly what we will sort of see it out here in this particular case out there. I am just going to reduce the zeros out. Next, what we have in this particular case is raw material transportation cost incurred is 1500. So, what did I say in financial accounting? In financial accounting, we said that whatever is the cost of transportation of material will be added to the cost of the material. We always said landed cost. If you remember, right, in the financial accounting, we always say, I said I used the example. You buy a car. What is the cost? What is the price of the car? You will not say X factory, X showroom. You will say what is the price that you have paid finally to ensure that it is moving on the road as of now. So, the landed cost. So, when we say material, the freight that is you incur on getting the material to your warehouse is also added to the cost of the material out there. So, I will say freight, add freight out there. Freight is, how much is the freight? Freight is about 1500. I am adding that also to that. I have opening stock, we will come back to that. I have a cleaning supplies purchase, we will come back to that. Closing stock, we will come back to that. Direct labor cost, we will come back to that, and accrued labor cost, we will come back to that. Now, what is the total cost of material out? The total cost of material in the purchase is normally, what do you call it as, the material purchased plus the freight that you pay minus what is called as the returns out there, if there are any purchase returns. That is, you purchase it, you see it does not meet the quality, you return it back, minus any purchase returns. In this case, purchase returns is blob out there, 0. So, this is what we will normally say in this particular case. I am just going to move it by what do you call it as a column out there. I think I'm just going to move it out here. So, I would term it this as A, and this is B and this is C and this is D is equal to A plus B plus A plus B minus C out there, and that is what I am going to term it as out here in this particular case out there. Now, this is the cost of, this is what is the cost of material purchased out there. Cost of materials purchased is so much. Now, what is the direct material? We have not arrived at the direct material list. What are we interested in? Direct material consumed, because that is what is we are interested. You might purchase a number of material, but many of it is lying in stock, or you might not have purchased any material, you would have used the material that is in stock. So, what are we interested in? Material utilized, direct material utilized. So, what do? We have to adjust it for the opening and closing stock like we did in the financial accounting. So, I will say add all the opening stock or opening inventory of raw material that is what we call it as in this particular case as E out here. I would say less reduce what is called as closing inventory of raw material. That is what I will term it as F out here. So, what is the final, what do you call it as material consumed? Direct materials consumed, let me even specify it. That is what G is equal to, is equal to D plus E minus F out. So, what are we looking at? I am looking at direct opening stock is nothing but about $2,000 and my closing stock is $4,500. So, what is my direct material? It is thus material purchased plus my opening stock minus my closing stock is what is the material that has been utilized in this particular case. Now, we talk about the next aspect out there, because we have to find the prime cost. I will talk about direct labor. What is the cost of direct labor? That is in this particular case direct labor cost incurred out there, that is actual incurred out there is about, what do you call it as, about $45,000 is what is that actual incurred out there. So, I will term it as H in this case. Next, accrued labor cost, I in this particular case accrued labor cost is 5,000. So, what is the total labor cost incurred out here? That is total direct labor cost. That is J is equal to H plus I out there. That is all what I am going to do out here. Next, I talk about what is called as direct expenses. In this case, what is the direct expense out there? In this case, direct expenditure, nothing. We will say cleaning supplies purchase. Now, I will debate out here. Cleaning supplies. What is the kind of firm you are looking at and what is this cleaning supply is going to be for? If cleaning, for example, if I say that I am looking at what is called as a garment manufacturing unit and I am buying what is called as this washing liquid, dyeing liquid, etc., out there, then what happens? This washing liquid, what I have, because what happens there when you make garment, this goes through a process of washing, polishing and so on and so forth out there, smoothing, washing and etc. And if I am buying some liquid for washing out there or smoothing the fabric out there, and I am running the fabric through that smoothing liquid out there, then the amount of money that I am spending on this becomes what is called as a direct expenditure, because it has a relationship to the output, it can be directly traced to a product. I have bought general cleaning product. I mean, I am not a garment manufacturing, I am an automobile manufacturing plant out there or something. I have just bought cleaning powder to clean the entire shop floor out there. Cleaning the entire shop floor has nothing to do with production out there, because unless until it is an integral part of production, it is not considered as a direct expenditure. In this particular case, I would say cleaning supplies, maybe for cleaning whatever it is, the raw material, maybe for cleaning the floor, maybe for cleaning the factory, maybe for whatever it is, cleaning the output, whatever it is, I do not know. So, I feel that I will consider this as not an integral part of the production process. Let me repeat, I am considering this not as a integral part of the production process out there. So, this unfortunately in this direct expenditure, actual part of it, actual and accrued part of it, I will keep it as 0 in this particular case out there. Actual and accrued part of it, I will keep it as 0. I will keep this as k out here, and then I'll say total direct expenses incurred in this particular case is basically the same, it's blob out. Sir, then where will the cleaning supplies go? It will go to the head manufacturing overhead out there. It will go under the head manufacturing overhead. It does not become the direct cost out there, because I cannot find a traceability unless until it is an integral part of production. I will not be able to find the traceability. So, since I will not be able to find the traceability, I am not considering it as a direct expenditure in this particular case. So, what happens? What is the, now I will say what is the prime cost? Now, I will say what is the prime cost out there. In this prime cost, my ABCD F G H I J K L M is equal to G plus J plus L out there. That is, what do you call it as, my direct material plus my direct labor expenditure plus my direct expenses, if any, will give me what is the prime cost that I am basically incurring in the process out there. With you on finding the prime cost. Now, let us go back to the exercise itself. Let us go back to the exercise out here. Let us go back to the slides out there. I am quickly going back to the slides out here. We talked about prime cost out there. Next stage, what do I do? After prime cost, I want to know what is the cost of the goods that are manufactured out there. Now, what do I do? When I have to find out what is the cost of the goods that are manufactured out there, I have to look at two basic aspects out there. Number one, I have to look at all the manufacturing overheads that are there out there. All the overheads related to the factory, that is what I have identified here. Add all the overheads related to the factory to the prime cost. Then adjust for work in process account, WIP, because when you would have seen the inventory part of it, inventory in the balance sheet, even financial accounting, when we saw the inventory part of it will always have three kinds of inventory: raw material inventory, work in process inventory, finished goods inventory. Finished goods inventory can be even subdivided at the factory yard, at the dealer's yard, whatever it is out there. Let us not even get into that kind of a thing. So, we are talking about work in process. Work in process inventory is the production has started, material has moved in, the labor has worked on it, some overheads have been spent. So, at the end of the financial year it is there. For example, on the year closing on 31st of March, if you look at a car assembly line, there will be cars getting assembled, partly assembled. On 31st of evening, when I close the shop out there, there are cars which are assembled. A tin ka dabba will be there without tires or without engine, or engine will be there without tires, whatever it is, semi-finished. They are all called as work in process. I have to account for that work in process inventory also. Only then I will know what is the cost of the goods that are manufactured out there. That is what we call it as the second step out here in this particular case out there. And this is what that is, what do you call it as, very prominent when we are looking at cost sheet. What is the cost sheet? We are classifying the expenditures, grouping the expenditures as a prime cost. Now I want to look at cost of goods manufactured. Then we will go on and on out there. Now to do that, let us go back to our PPT slide out there, and I am going to look at what you call it as the in this particular case. I am going to take up one more exercise out there. Let me take up the exercise out there. I am going to look at exercise 1.1. Before I look at exercise 1.1, let me look at variation in this exercise out there. What is that variation in this exercise? Very simple. Supposing I said that in this particular case, if I said the opening raw material inventory was $25,000 incurred separate on a site, and then I incurred a separate on-site material inspection, so on. Let us see this. If there is, for example, when under 4 of these aspects I have basically given, will these 4 impact the prime cost? That is what I am trying to look at. Now I will say opening of raw material inventory by 25,000. Yes, this will impact the prime cost. Why it will impact the prime cost? Because opening raw material initially at 2,000. Now if I make it 25,000 out there, you can actually see the prime cost moves to 95,000 out there, because moment I make this change out there, it moves to about 92,000. The prime cost changes. That is going to impact the prime cost. Whereas next one, incurred a separate on-site material inspection cost of 3,500. You are doing an on-site inspection cost of 3,500. What has that got to do with production? What is the relationship with production? If production process involves your on-site inspection at every, what do you call it as, not at a regular interval, for every output that you are getting, that is, it is not on-site inspection, it is permanently being there on-site. So you are doing an on-site inspection. This is an independent activity. This has nothing to do with your production activity. So nothing to do with your prime cost. No, nothing to do with your prime cost in this particular case. Let me erase the numbers out. I'm going to put it here. Next, appointed an additional factory supervisor for 60,000. Yes, it impacts the cost of production, because you appointed a factory supervisor. The factory supervisor is for production, he is supervising the production. But you will pay the salary to the factory supervisor even if production is not there, even if production is low, even if you are operating 150%, even if you are operating at 50% out there. The salary is going to remain the same. It is not incentive, salary is going to remain. So what is it? It is not a direct expenditure, it is an indirect expenditure, so not part of prime cost. What is the third one? Incurred unexpected production maintenance, machine maintenance, $20,000, 20,000 rupees. Now, unexpected production maintenance out there. You have done maintenance of the machine. Does maintenance of the machine have a relationship to the output? Well, yes and no. No sir, if I maintain the machine will run well. If I don't maintain the machine will not run well. So it is related to production. Perfectly alright, beautiful. But does it have a linear relationship? If I maintain the machine, every time I maintain the machine, what is called as my output is clearly defined out there. My output is related to the maintenance of the machine, maintenance cost of the machine. Need not be. Output can vary with the maintenance out there. So output and maintenance of the machine need not go together, need not be linear. So what happens? No, this also does not affect. So in effect, what is happening? Only if there is a change in opening inventory of raw material, purchase of raw material, incurring expenditure on the labor cost, incurring expenditure on direct expenditure, only then your prime cost will vary. Otherwise, prime cost will not vary. So all these expenditure are not pertaining to prime cost out there. Okay, fine. Let us go back to the earlier example itself out there. I am knocking off this 25,000 out here, because because in this exercise 2, what we need that. Exercise 1.1. It still says determine the prime cost. Now let us look at it in this particular case. Raw material purchase 20,000 already accounted for. Opening stock 2,000, yes, accounted for. Raw material transportation cost 1,500 accounted for. Damaged raw materials purchased returned to the vendor. Damaged raw material, that is what we talk about, purchase returns. Return to the vendor, how much? $3,000 returned to the vendor, impacting the prime cost. Next, coolants used on the job while in operation. Please understand, now be beautifully it is worded. Coolants used on the job while in operation. When the job is in operation, I am using a coolant. When the job is not in operation, I am not using the coolant. What happens? The expenditure is related directly, linearly to the job, to the production activity. Expenditure is related to the production activity. Now, may not be a material, sir, it is not material. No, it is not material, because I cannot trace it to the final product. In the 5 granules of plastic, I can trace it here. The coolant used, coolant is dead and gone, it is gone. Coolant is not there anywhere in the product out there. So, it cannot be traced back to the product. So, yes, it is an actual expenditure, TUAL, I think I must say A here, out here, it is an expenditure out there. What is the expenditure? 4,500 is the expenditure out there. It is a coolant which I have utilized on the job. When the job is on, the coolant is flowing on the job. It is a typical lathe machine you have seen. When the job is not there, the coolant is not flowing out there. So, what happens? That expenditure is related to the production, the job activity. That is why I have taken it. Cleaning supplies, I have explained, I am not considering. Closing stock of raw material 4,500, we have already accounted for. Direct labor cost of 45,000 and accrued labor cost of 5,000, we have accounted for. So, now what happens? Your, what do you call it as, your prime cost becomes about 70,500 in this particular case, and that is what we have done out here. Now, I am going to move further in this particular case, exercise itself. I am going to move this exercise itself to the next one, because I want to look at your cost of production out there. I want to look at your cost of production in this particular case out there. I think, now what did I say? Cost of production. We will talk about cost of production in a few minutes from now. But before we talk about production, I want to know what is the factory overhead out there, or the works cost, gross in this particular case out there, works cost, gross in that particular case out there. So, what do? I want to calculate the factory overhead. He has given everything. I want to calculate what is the factory overhead out there. I will say, I will calculate what is the factory overhead out there. So, what do we look at? We will say calculate factory overhead. Same thing. Raw material 20,000 is there, opening stock 2,000 is there, raw material transportation is there, damaged material is there, we have accounted for, coolant is there, cleaning supplies is there. Now, let us look at what is this factory overhead. Now, I will say cleaning supplies. What is the cleaning supplies? 3,800 is the cleaning supplies in this particular case, is 3,800 is the cleaning supplies that I incurred out there. That is a part of the factory overhead, assuming that it is incurred for the factory. Now, if somebody says, no, cleaning supplies are incurred for cleaning the office, then it will not be part of the factory overhead. It's here, it's assumed that it is considered for cleaning the, it's in the factory shop floor out there, so I am taking it. Then closing stock of raw material, direct cost incurred, accrued labor cost is fine. Incurred a separate on-site material inspection cost out there. Yes, part of my overhead out there, material inspection cost out there, on-site material inspection cost. On-site material inspection cost, how much have I incurred? In this particular case, 3,500, yes. Appointed a factory supervisor, yes, appointed a factory how much is the amount? 60,000 is the amount out there and 60,000 out there, yes. Next, I see incurred unexpected production, maintenance, machine maintenance out there. So, what happens? Machine production, machine maintenance. Machine maintenance, what is the amount incurred? $20,000 is the amount that is incurred out there in this case. So, what happens? This entire total of this is what we call it as the factory overhead out there. The total of this is what I would call it as the factory overhead. Factory overhead out there. Now, let me term it as N in this particular case. Now, what happens? Next, I will say what is the works cost, gross, or what do you call it as gross cost of CO, cost of production out there, COP, cost of production out there, gross. Why do you say gross? Because we have not adjusted for the opening and closing work in process out there. What is that? Gross work in process. Gross work in process is nothing but gross works cost is nothing but what is called as an MNO. PO is equal to M plus N out there, M plus N out there, and this is what we are talking about out here in this particular case out there. So, what happens? That is what makes it the works cost out there.